Hello everyone, I'm Ajay Vaishnav and you're watching Budget Bites. And today we have a very special guest, former Finance Secretary, Subhash Chandra Garg, sir. Sir, welcome to the show.
Thank you, Ajay. Nice to see you.
Sir, just a few days are left before Finance Minister Nirmala Sitharaman presents what could be the last full budget of the Modi dispensation. And we are heading into a challenging macro situation. Also, it's an election year. What do you think, what will be on her mind and how much these variables will guide the choices she will make in the budget?
See, coincidentally, I was the person doing the budget in 2018, which also happened to be the last year of that term. So I can understand what goes in the mind of the finance minister at this time. There is a bit of a difference in the situation today. In 2018, in my judgment, the government was very confident about the reforms it was rolling out. Many new initiatives had been brought in, like the GST, IBC and others. And the government undertook a very large disinvestment program as well. However, today the situation is somewhat different. We are coming out of the COVID, we are also coming out of that push in the growth and inflation which was engineered by the COVID related and post consequences. The economy is in a bit of fragile situation, if I may say so. Growth is likely to come under pressure, inflation is peaked, coming down, but government's fiscal position is really serious. Government is running fiscal deficit of over 6% for 3 years continuously. The tax growth is expected to slow down next year. Expenditure commitments have gone up. So in this situation, if you make the budget and you keep in mind that elections are a year away, then you may tend to be more populist this time. So I suspect there would be a dose of populism, expansion of schemes like PM Kisan or something for labor, or something for farmers, giveaways like it has already been done. Food subsidy has been expanded, food grains have been made free of cost. Fertilizers have virtually been subsidized 90% of the cost. So there may be a little more of these kind of populist interventions. Government has made capital expenditure as its main sort of selling point, so to say, and there is a lot of buzz around the advantages of capital expenditure, though we can go into that question that the quality and the real increase in the capital expenditures might be a little bit different than what is made to appear. But the government is very much likely to expand the capital expenditure program on infrastructure and others. On taxation, I don't see much happening. If the government can address the distortions in the slabs and the rates on both indirect taxes as well as direct taxes, it will be good. But the question like expanding the minimum exemption limits have large fiscal implications, may not happen. So on the whole, I see this budget with a tinge or a little bit more of populism, less of reforms, less of taxation reforms, and bit of expansion on the expenditure, especially the capital expenditure side.
This is something which is on everyone's mind, including mine, and you've talked about it also. Do you think how much latitude they have to tweak the income tax slabs, especially for lower level income? We already know the situation with inflation. It has, it looks like it has come under control, but food inflation is still into higher limits. in an election year, don't you think finance minister and the government would like to leave more money in the hands of the people?
See, the food, and that brings me to that consumer price inflation, which has come down but still high for the comfort of people. And more worryingly, the elements of food into it, cereals and vegetables have come down, but cereals have gone up. There is an increase in protein-based kind of things which is inching up. So consumer price inflation will remain a worry. But wholesale has come down, and that is where the tax growth is more related. So tax growth is likely to be affected adversely in the next year, but the consumer sort of comfort because of this consumer price index dynamics is unlikely to change for much for the government. There is a increase in wheat prices, as you see, and vegetable prices might come again because that's too volatile depending upon some short-term sort of damage in crops, etc. But the question you asked me about whether it makes sense to leave more money in the hands of people, that you basically perhaps mean that if you reduce the income tax rates, it leaves more money into the hands of the people.
Right.
But believe me, the income tax is paid by very few people. The total taxpayers are about 5 crores. But then almost 80-85% or even 90% of them don't pay any taxes. They file returns because they are below that 5 lakh taxation limit. So if you reduce the tax rates to leave out something in the hands of the income tax pays, you basically leave it in the hands of very relatively wealthier people. That doesn't make any benefit or provide any comfort to the people at large. So I don't think it makes sense.
But it makes for good politics also, in a sense that you have tweaked tax rates, you show that you are leaving more money in the hands of the people, and it has that whole feel-good factor.
Yeah, I agree with that. You see, if you go back to 2019, that interim budget, when the minister announced virtually tax-free status up to 5 lakh rupees of those who earn income 5 lakh, that was meant for bringing that feel-good factor. And the class of people who pay tax are the vocal class, more media visible and all, and therefore it makes sense politically to do it for that. But that does not really make difference as far as the life of the most of the people in the country are concerned.
True, sir. Sir, you have also often talked about bringing uniformity in taxation of asset classes. And you have often said that there has to be some sort of parity in the way we tax different transactions, whether it's under crypto or basically long-term capital gains. So do you think there is some room for...
See, that is very urgent. We have a very dysfunctional, distorted kind of capital gains taxation regime in the country. There are several things. Real estate is taxed differently. Long-term capital gains are treated differently. Short-terms differently. Crypto differently. Private equity gains very differently. It doesn't really matter how you what kind of assets are yielding you a capital gain. That connection with investment being preferred and non-investment or unproductive assets not being preferred, I think is a mistaken one, and which I think is long forgotten kind of thing. Likewise, there are distortions about whether you allow indexation somewhere, you don't allow indexation somewhere, or you allow set-off or you don't allow set-off. So if the government can sort of make this capital gains taxation regime very simple and non-discriminatory across the asset classes, That would be really a good thing, not only for the asset holders or the people, but also for the government in the matter of earning more income. I'll just give you one instance. There was a very dysfunctional stamp duty regime in the country. All states were taxing differently on the whole, and people and the states were putting very high rates of tax in stamp duties in the attempt to get it. We rationalized it in 2019 budget. If you and this is functional. There is a single rate of taxation in the country, and it depends upon the state where the buyer is located to pay the tax, and that has not only made it very simple, but has also yielded higher stamp duty as a whole. So if you reform the capital gains taxation regime, both the governments will gain as well as the asset holders, as I said, or the people will gain. And later on, you can actually use this to bring the other element of taxation of wealth, which in the country we are missing it completely now. Unfortunately, the wealth tax was abolished in 2015. We need to bring the wealth tax. Today, GDP is about $3.5 trillion, but Indians' household asset or wealth is about $15 to $16 trillion. Wow. That gets completely untaxed. Why should and most of the taxes paid by the labor or the people who earn salaries and wages and all, and the capital or the assets which earn so much of profit escapes the tax. So first, if you reform the capital gains taxation regime, and then in the later stage you get into a functional good wealth taxation regime, I think we will be serving India well.
We started the whole conversation with macro issues and the worsening situation. And you also talked about fiscal deficit. Do you have any particular number in mind? Because we have been posting fiscal deficit in excess of 6% for 3 years in a row. And I think in last budget speech, Finance Minister Sitharaman set the target for fiscal 26 at 4.5%. Is that achievable?
See, that's very much achievable. We are running the fiscal deficit at a very high level. The 6.4, 6.7%, a very high level of fiscal deficit. We'll pay for it very dearly in times to come. If you borrow this much money, 15 to 16 lakh crores, you add on your interest burden every year by about 1 to 1.25 lakh crores. That's a very heavy burden it imposes. And when this expenditure goes into, or these resources goes into unproductive expenditure, your servicing burden also goes up. And therefore, in my judgment, there is a very good case for bringing the fiscal deficit down to lower levels of 4% or so. I wrote a piece today and I suggested how we can bring it down to 4%. There is a lot of scope. For example, the government provides about 1 lakh crore of loans to the state governments. It doesn't add any additional resources to the states. You can simply do away with this provision of loans to the states. Likewise, we have so many subsidies which are dysfunctional. PM Kisan, for example, the petroleum subsidies, even fertilizer subsidies can be reformed, like we reformed the LPG subsidies earlier. You can save about 1.5 lakh crores from about 7 lakh crores which we spend in subsidies today. Likewise, our capital expenditure programs, investment programs also has a good deal of wasteful expenditure. Why do we invest so much in Air Indias, in the MTNLs, in the BSNLs of the world? Even highways and railways are being completely funded from the budget today instead of them raising from the market resources. So if you do this kind of tweaking, you can easily save about 6 to 7 lakh crores, which will give you 2% reduction in fiscal deficit. And therefore, in my judgment, the government must aim in bringing down the fiscal deficit to about 4%, and by using these means. Whether the government will do it or not is a big question. I suspect it may not, and if it does not gather that kind of courage to do it, then we'll end up with this fiscal deficit this year of about 6%. I think there is GDP increase, nominal GDP, so it will come down a little bit, and the government will also show some consolidation. So my assessment is that in that situation, we might be seeing fiscal deficit of just a little shy, less than 6%.
Okay. Sir, you also brought the issue of disinvestment. Do you think government will set a higher target? And as we have already seen, it's not working that much. Barring Air India, the progress has been not like what the government would want. So, what will the finance minister do on that front?
See, this thing is quite clear from what you've seen the experience in the last 4 years. Our disinvestment and the privatization program has literally floundered. In last 4 years, we have not been able to achieve the disinvestment targets anywhere close. In some years, we have done only about 15,000 crores. This year is no better. So far, we have done only about, I think, 31,000 crores or 32,000 crores, despite the LIC IPO bringing about 20,000 crores odd. And I don't think the government would meet even 65,000 crores target, which is there, which is a very low target. Compare it to 2.1 lakh crores and 1.75 lakh crores earlier. So this was a low target, but still it will go unachieved. One successful transaction, Air India, that also because it was bleeding like anything. Every year, if you lose about 8 to 10,000 crores and you're not delivering any real good public service, so it was good, but government didn't gain anything. It's 2,500 odd crores which it got, but it took about 1.25 lakh crores hit on its books, and that is what it is. So I don't see any serious progress happening on bank privatization or otherwise. The finance minister listed 8 companies in 21-22 budget, which is now 2 years old, and of that only the Air India happened and nothing else. So I think for the year to come, government seems to be not very keen on the disinvestment privatization program any longer. So my sense is that there would be a smaller target. I don't think it will exceed 50,000 crores in the year, and nothing really great is going to happen on the disinvestment front in the next year.
Sir, and there's something, and I think you have written a book on it also. What will it take India to become a $10 trillion economy? I think in your book you have talked about what are the steps we need to take, and what will be the year when we can achieve that. We have a $5 trillion target, and you have set the bar even higher at $10 trillion. So how will we be able to achieve that? What steps we need to take?
Ajay, by the way, this $10 trillion target was also indicated by the government in 2019-20 budget. So it comes from the government, not from me. So I just adopted and then wrote about how to go about it. In economy, nothing is destined or you can't claim it as a matter of right. You'll have to work hard to attain it. And a $10 trillion economy, which is about 3 times of what the economy is today, can be done in 10 to 12 years by the middle of 2030s. But that will require enormous amount of reforms. To give you just one instance, if you can't get out of the public sector and keep investing enormous amount, which doesn't yield you anything, and continue to constrain the private sector and keep the private sector dependent on the government for so many investments and others, I don't think we will be able to do it. We'll have to get our digital economy right, we'll have to get our environmental economy right, we'll have to get a lot of policies for infrastructure. It's a long subject and it requires a very comprehensive discussion. It requires enormous amount of reforming the government itself. So I believe India deserves, our people deserve to become relatively better off than what it is today. 20% or 25% of Indian being poor and 80 crore Indians receiving free food grains. I think that's the kind of dependency we must get out. We can't celebrate that we are giving 80 crore people free ration to keep their body and soul together. We should aspire for the day that no one in India requires this kind of handout from the government. That would be the way. But how to make that population productive and generate the incomes of themselves and for the country, I think is a long subject which we can discuss some other time. But we can do it. We have the capability. But in the current set of policies and the framework and the structure, I don't think we will do it. We can't and we must not commit this mistake that this is predestined and by this date we will be $25 trillion or will be this much. I think that's a very uneducated talk to my mind.
Thank you, sir. That's all from my side, and thank you for chatting with us on the union budget.
Thank you, Ajay. Thank you very much. I enjoyed the conversation. Thanks a lot.